Good afternoon, everyone, and welcome to the interaction with the management of Blue Dart Express. Firstly, I would like to thank the management for giving us the opportunity to host the call. So, today we have with us Mr. Sagar Patil, CFO, and Mr. Tushar Gunderia, Head of Legal and Compliance and Company Secretary. I would now hand over the call to the management team to provide some opening remarks on the performance, and then we can start with the Q&A session. Thank you, and over to you, sir.
Thank you, Alok, and good afternoon, all. A very warm welcome to all of you. I would like to inform you that Mr. Sagar Patil, interim CFO, has since been appointed as Chief Financial Officer with effect from today, that is 1st August 2025. And most of you may be aware, Sagar is already associated with Blue Dart Express for last more than 8 to 9 years. As you are aware, the Board of Directors of the company, in its meeting held on 29th July 2025, approved the financial results of the company for the quarter ended 30th June 2025, and the company declared the financial results for the quarter ended 30th June 2025, wherein the company posted revenue from operations of rupees 14,419 million and profit after tax of rupees 469 million for the quarter ended 30th June 2025. Blue Dart continues to build strong momentum driven by substantial traction across both B2B and B2C products. Blue Dart marked a major milestone with the launch of India's largest integrated operating facility at Bijwashan in New Delhi, further enhancing our operational capabilities in the service efficiency. Additionally, the company recently announced the expansion of its network with the introduction of Guwahati last year as a direct flying location. This strategic move was driven by Blue Dart's vision to empower Northeast India, a zone that plays a pivotal role in the country's economic growth. Furthermore, Blue Dart was awarded the Best Express Logistics Provider 2025 by the Institute of Supply Chain Management. In addition to this industry recognition, Blue Dart was also certified as Great Place to Work for the 15th consecutive year, an acknowledgement of our unwavering commitment to fostering a culture of trust, inclusivity, and excellence. By consistently investing our infrastructure and people, Blue Dart continues to strengthen its position as both the logistics partner of choice and the employer of choice. The results have been already uploaded on the stock exchange websites and also posted on the company's website. I now hand over the call to Mr. Sagar Patil, CFO, for further proceedings. Thank you.
Thank you, Tushar. Good afternoon, all. Sagar Patil here. So we have closed another quarter with a healthy growth on revenue, backed up by good growth in kilos as well as shipments. We have closed the quarter at a consolidated level with a EPS of 20.5 rupees per share. And yes, this is the normal business or results for the quarter. And yeah, we are looking forward for a rest of the year. And yeah, we can start with the questions.
Sure, thank you. So first, we'll take the first question from Mr. Krupashankar. Please go ahead.
Hi, good evening, and thank you for the opportunity, sir. First of all, a bookkeeping question. If you can share what would have been the tonnage for the quarter as well as the number of parcels transported?
Sure. So the number of parcels was 94.1 million, and the tonnage was 340 or 340068 tons, 1,000 tons.
Got it. Got it. So, yeah. So one follow-up question on that. So as you can see that on a sequential basis, the tonnage has improved, yes. And also the total parcels have also improved quite well. But if you look at the margins, the decline has been quite sharp. What was around on a consolidated basis about 15%, and on a standalone basis about 8 to 9% has dropped to about 7% and close to 13.5%. So just wanted to get some sense on what are the key reasons why the margins are weaker, and is there any one-off related costs in this profitability what you have reported?
The EBITDA margin has been 15.63% in last year same quarter, which is now
Yes.
14.15%. So there is a drop of about 1.5% there. No one-off, but what we see, and also all the products are trending the trajectory. What we see is more of a change in the product or the customer mix. Some products going faster. As you can see, also last couple of quarters, we have been growing faster in kilos as compared to the growth rate in shipment. So we see a heavier parcels coming more. So with the heavier parcels, the element of, I would say, the freight as we see goes higher as compared to the service when it comes to the smaller parcels. So we see that shift typically. So there is no major business loss or gain for any specific customers. I mean, beyond the materiality threshold. However, we see that shift happening within the customer and the product or the lane mix that we see, weight mix as well. Yes, it's a complex network with multiple locations, multiple modes that we operate in. So sometimes the customer mix may cause a percent here and there in terms of the profitability as it derives. So yeah, other than that, there is no one-off that has impacted this quarter.
Understood, sir. So nothing to do with the recently commissioned facility in Delhi. Because there should be some ramp up cost attached with it. So is that something which is potentially dragging your margins until the ramp up reaches an optimal level? That's not a reason?
That's not the reason. I mean, yes, there is a new investment that has come in, but in the overall scenario, it is not as significant as it will impact the margin as a percentage. I would say. Yeah.
Understood. One more question which I had was with respect to growth, what we would have reported on the B2B as well as B2C. If you can share that would be really helpful.
So yeah, I mean, we do not have segmented results as such, but from the point of view of products per se, B2C is the e-com or retail segment as that we say. I mean, as we call. See, growth is largely driven by both in B2B as well as B2C. But yeah, B2B also includes products like air, parcel, or documents. In B2C, we see revenue growth of about 20%, and in B2B, it's about 2.4% for the quarter.
Oh, that's quite material, I think. But in the previous comment, you also mentioned that there is a higher growth in heavier shipment parcels as well. This is on a YOY basis we are talking about, right, sir?
Yes.
So we are getting higher portion of heavier shipments in B2C as well. Is that understanding correct?
Within B2C, if you look at it, there is no significant change in the kilos per shipment profile in our both ground as well as air segment of retail. Within B2B surface, which is a higher KPS as compared to air or documents. So that is where the KPS would go up. But as far as B2C is concerned, there is no significant change in the profile.
Got it. Thank you, sir. I'll get back in with you. Thank you.
Thank you. Anyone having question can please raise their hand or put it in the chat box below. So we'll take next question from Mr. Achal Lohade. Please go ahead.
Yeah, good afternoon, sir. Thank you for the opportunity. Am I audible?
Yes, Achal.
Yes. Thank you. Sir, if you could help us understand in terms of the freighters, the number of freighters, how many of these are owned, stroke leased? And B, if I look at the tonnages, what we report in the annual report, that seems to be fairly similar for last 4-5 years. If you could just clarify as to how it works in terms of these tonnages, how do you compute that? Is that only for the owned, or is that owned plus leased, or is it the tonnages is for the even what you ship through the other passenger lines?
Yes, sure, Achal. So we have total 8 freighters. We have 6 757 and 2 737s. Of this, 1 757 is leased, whereas the rest of the 7 are owned ones. So that's the profile of the freighters. In terms of tonnages, what we report as tonnages is including all the products as we build to the customers. Be whether we fly them on our own aircrafts or our trucks or the commercial airlines. So these include all the products. In
Understood.
fact, just to add also, these are all build kilos. So for example, if there is a shipment going from place A to B, these are essentially multimodal movements from door to door. So partly we may also move on road the same shipment, but when we report, these are reported as the build kilos, because customer will be billed only once for the total weight of the shipment.
Understood. Understood. And if you could help us understand in terms of the aircraft utilization, for the quarter, how do you see it growing? And I see that, and if you could help us understand in terms of the growth in surface versus air for the quarter in terms of revenues.
Yeah. So in terms of the first question was about
Um,
surface.
yeah, in terms of the revenue growth in surface stroke air.
Okay. Yeah. So the surface growth, which includes both e-tail as well as the surface B2B, the growth has been 13% in sales, whereas in air it has been 2.2%. Yeah, your first question was about the capacity utilization of the freighter.
Yeah,
So it has been consistent around around 85% plus or minus. So our capacity utilization is in terms of how do we fill our aircraft in terms of the weight that we carry on the pallets, and not in terms of the number of hours that we fly for. So essentially, these are the flights that fly essentially at night. To carry the daily picked up shipments, etc. So there can be different ways of looking at aircraft utilization. For us, it is supporting our express movement. So we calculate based on the loads that are being loaded on the aircraft when it flies. So, and also the way we operate our network is that we ensure, unless there is a load available, be it weekend or holiday or weekday, we would not fly the aircraft, because we also have a good amount of network on the commercial airline, the belly loads that we carry.
got it. And if you could just clarify on the lease arrangements, sir. So out of 8, you said 1 is leased, everything else is
Yes,
owned. Have I
yes,
understood
yes.
right?
Right. Yes.
Okay. So if you could help us understand, in terms of these cost, how does it work for the owned versus leased? And how do you make the decision between, whether to purchase the aircraft or take it on lease?
So we had most of our aircrafts leased at some point of time. I think few years back, we converted them into from lease to buy. Essentially, when we lease the aircraft, the requirements related to maintenance approvals, statutory approvals, these are all to the account of the lessee. So we found them more beneficial by leasing. By owning rather than by leasing, because the interest element was proving out to be better. From balance sheet point of view, also, even if you lease, they are accounted as a ROU asset in the balance sheet. So it doesn't make your balance sheet light as such. So from that point of view, we converted them from lease to buy some time back.
Understood. And just one last question, if I may, in
Yeah.
terms of fundamentally between air and surface,
Yes.
is there a difference in terms of ROCE profile? I understand last time you said margin, there isn't a big difference between the two, but how about the ROCE?
From ROCE point of view, I mean, there are two elements. One is return and then the capital employed. So capital employed for air would typically be higher because of the captive assets that we have. So the ROCE would be relatively lower as compared to surface.
Understood.
You
Understood. And
you
just
also had
clarify.
one
Yes,
you had also one question as to, in terms of the kilos or the weights have been little more or less on the same lines since last few
for
years.
past few years. Yes, sir. Yeah.
One reason
Tonnages,
also has been
basically.
that
Yes.
21, 22 and financial year, including even 22, 23, we had done a lot of charters during post-pandemic times. So that had taken our kilos really on a higher level. It was more of a pandemic impact where we had to we could fly large number of kilos across the countries as well as within the countries. And now after 23, 24 onwards, it is a normal business that we are in.
Sounds good, sir. Thank you so much for the clarification. I'll fall back in the queue for further questions. Thank you.
We'll take next question from Mr. Dhruv Jain.
Yeah. Hi, am I audible?
Yes, Dhruv.
Yeah.
So my first question is that if you could provide the mix between B2B and B2C as a percentage of consolidated sales, how much is what segment?
So for this quarter, it is 71 and or 71 and 29. B2B is 71 and B2C is 29.
And how has that trended over the last few years, sir?
So it was around last year same quarter was around 74 to 26. So we have seen the share of B2C going up, but it was around the same between 70s and 30s in the earlier quarters as such.
So,
Now
and
we
sir,
see, yeah.
yeah, sir, broadly, what would be the margin differential between the two segments?
Margin across the products would be more or less same, on the same lines, I would say. The yield
Okay.
would be different, but the margin percentage would be similar. Yeah.
Okay. And sir, optically looking, B2B growth seems quite low in this quarter. So just wanted to understand how should we think about this segment's growth over the next, say, 2 to 3 years, and why such a smaller number in terms of growth in this quarter?
So we would have plans to grow the B2B business as well, especially driven by the surface. On air, we have captive capacity, and it is also optimally utilized unless we have opportunities for doing day flights, either for charters or. So, I mean, it would be a forward-looking statement, but I would say that we are also looking for growing our B2B segment faster. Surface B2B, we do not have a very high market share. We are not number one over there. So there would be plans to, ramp up that business along with, of course, B2C on ground, as we call a DAT plus, we used to call it. So, I mean, there is plan on both the segments.
And sir, in the B2B segment, if I may, if you could just split what would be the air mix and the road mix, the surface mix?
Air would be slightly higher in terms of revenue. So 71 may include about maybe 35% of air and no, close to 40% would be air and 30% would be surface.
Got it, sir. Thank you so much, and all the best.
Thank you, Dhruv.
Yeah, sir, we have one question in the chat box. So the first is on the margin side. So margin actually had come down in the quarter if you look at the standalone basis. What's the view ahead? Or should it improve from here on, or any color you can throw on the margin side?
Yeah, I mean, without making a forward-looking statement, but yes, there is also seasonality that comes in, wherein we have a second half characterized by the peak loads that come in. So the focus in first half is typically to maintain and plan for maintaining the service quality when the peak volumes come in. So yeah, we would be working towards improving the margin, but this is a normal business that we have had in this quarter, and yeah, the effort will be to improve the margins.
Sure. We'll take next question from Mr. Nirmal. Please go ahead.
Hello, am I audible?
Yes, Nirmal.
Thank you for the opportunity. Sir, you mentioned in one of the responses that The fall in EBITDA
No,
was
you are not quite audible. There is up and down in your voice.
uh,
Can
Hello?
you repeat the question?
is it better now?
Yes.
So my question is, in one of the responses, you mentioned that the fall in EBITDA this quarter has been the result of change in customer mix. So if you can elaborate on that, what kind of customer mix are we talking about?
So it's a mix of number of factors, including the at times maybe a high margin or a high. I mean the mix of customers, the product mix as well as lane mix. So if the customers who provide you good volume and enjoying better pricing, if they ship more, or if the customers who ship with you a higher kilo or KPS product versus a lower kilo product, so the service element in the product involved, if that goes up and down, then the margin can also move accordingly in a short term.
Okay. And so, also, what was the reason for a rise in other income, other expenses this quarter? There is a rise of about 25%.
So other expenses would include, say, rentals, wherein we had implemented or we had added Bijwasan last year. Around, I think this quarter, part of the quarter, that spend was not there. So that will be one small reason over there. Communications, there will be some increase, but not a big number. We have implemented some automated tools for call bridge where we have invested some amount there. Yeah,
Yeah, okay. So this should be the new sort of normal going at like should we see this going at next quarters also?
so in terms of absolute, this may not go down, but this will support the incremental volumes as the business goes up with continued growth as such. So as a percentage to revenue, it can improve.
Okay. Okay. Sir, one last question on number of shipments.
Yes.
If you look at the growth in growth in the number of shipments and also tonnage for the past 3 years, while
Yes.
growth has been positive, the growth rate YOY has come down from about 24% to 5% in shipments and 24% to 11% in tonnage. So what could be the reason behind this?
Yes, that is where if the higher kilos per shipment, heavier parcels grow faster. These are characterized by more of a freight element, I would say, that the customer look at it. So that is where the rates become more competitive. Whereas the smaller, lighter shipments would have more of a service component from a door-to-door, efficient, timely delivery point of view. So that is where the value perceived and paid for by the customers would be higher for a lighter shipment. So if your kilos go faster as compared to shipments in a given period, there can be some dilution in the margin. Again, depending on, along with that comes the lane mix, customer mix, etc.
Oh, thank you so much. I'll call back.
We'll take next question from Mr. Anshul Agrawal. Please go ahead.
Hi, thank you for the opportunity. One clarification, sir. What is our B2B and B2C growth numbers for the current quarter? Y and Y? I missed that number.
Yeah, so for B2B, the revenue growth was 2.4% and B2C was 20.2% in revenue.
Okay. Got it. I understand that, we don't break down our revenues in terms of air and surface. But in general understanding, would B2C see a larger share of surface, or is it more restricted towards air only?
So the share of air has been more in B2C, but our ground B2C also in fact has been the growth driver. So the share of ground has been also growing. The ratio is between now 16:11 between air and ground on B2C in revenue.
Okay, so just the way you suggested that 40-30% is the breakup of B2B in air and surface. In B2C it is 16 and 11. I didn't. Is that correct?
Yes, that's the ratio. Yeah.
Got it. The second question was in terms of understanding, sir. When you mentioned that when kilos grow faster than shipments,
Yes.
wouldn't that also imply that when surface grows faster than air? Because I would suspect the lighter shipments go via air versus the heavier freight goes via surface. Would that understanding be correct?
Uh, Largely, yes, because the products also are so we do have shipments, heavier shipments going on air. We have the air parcel business catering to that. But yes, the shipments would typically be heavier than the air shipments.
Got it. That's it from my end. Thank you.
Yeah, thanks.
We'll take next question from Ankita. Please go ahead.
Hi, thank you. Sir, we were doing investment in our ground network. So largely, the focus here is to handle more B2B parcels or B2C parcels. And where can we see this improvement in network? Because if I see the annual report, the facilities 2 years back was approximately 2,347, which is now 2,284. So, where are these investments happening?
So largely, the investments also happen by consolidating smaller facilities, and that is what we have done in Bijwasan last year for air cum ETEL facility. Even what we are doing now for ground facilities, also consolidation of about 10 facilities. So typically, as the business grows, we do not do a big investment, but then in pockets wherever the demand is increasing, that is where we add the facilities. But then when it reaches to a good volume, then we consolidate. So that is where the reduction in the number of facilities will be a mix of both consolidation as well as at times closing down the smaller facilities, remote facilities where we do not see a significant utilization. These will be very small facilities, 100 square feet, 200 square feet also would come in there, where we may consolidate or even close sometimes when there are no significant business or shipments going to that location.
Hmm. And between focus area more towards B2B volumes or B2C?
It's both. So our driver has been surface B2B, the growth driver, and the e-tail. Both are running on ground. Yeah. So B2C on ground as well as B2B on ground.
Hello, sorry for the disturbance.
Could you hear me?
Yes, sir. Can you please repeat?
Yeah. So I was saying our growth drivers are both in B2B as well as B2C. In terms of volumes, we see the growth coming from surface B2B and also from the surface B2C, which is the e-tail business.
Sir. Also, sir, you was earlier giving the tonnage handled on or owned aircraft in the annual report. I didn't find the number this time for FY25. So, how much would that be?
Okay, I do not have that number handy right now.
We'll send it to you, Ankita. Yeah.
Got it. And sir, where is the two new aircrafts that we had added?
Yes.
On which routes are they deployed currently, and what is the utilization of the two aircraft specifically?
So we run our network. So these are not catering to any point to point, but then both the aircrafts are touching Guwahati. So while Guwahati is one of the stations for them. They also touch Delhi, Bangalore, as well as Mumbai in their route at night.
And utilization?
Utilization, again, it's a normal. It will be about 85%. There would be it would made up of sectors which are weak and strong, but overall utilization would be at about 85%.
Got it. And sir, let's just one last thing again on the annual report. Here, we have our per night capacity. Earlier, it was 500 tons per night. Even after the addition of the two aircrafts, also it still shows 500 tons per night. Has it not gone up, our capacity?
You are comparing 500 from which year we have mentioned in annual report?
Sir, I have numbers. Since FY18, this number is showing 500 tons per night till FY25 annual report.
We'll check.
We'll check and come back to you, Ankita.
And sir, last one, if we say that our profitability both on the B2B and B2C segment in percentage term, the profit markup on both the segments is similar, then
Yes.
why change in mix is impacting margins?
So when you look at the profitability, we have a network that is interconnected when it comes to products. So these smaller parcels will have a same first mile and last mile, uh, but it will get mixed up with the middle mile whether it is air or ground, depending on whether it is going on air or ground. So there would be some allocations in play, especially when your ground is growing faster as compared to air. The variable margin on the air, because there is a largely fixed capacity, will be relatively lower as compared to ground. So I'm talking about variable margin, not the actual margin as such. So when the business grows and when it goes more on ground in a quarter, then there can be at an overall level, the margin can grow slower or it can be lower as compared to the earlier quarter as such. So, but at the same time, having said that, air is a limited resource. We are the only freighters who are consistently flying aircraft on a daily basis. So there can be so with the same capacity and with the business volumes growing, there can be a better possibility of getting better yields over there. So that again opens up an opportunity when we look at the movement in margins happening. So as a business, we keep on looking at what mix of products or mix or customer mix or the lane mix that is being flied, and work towards reaching to a better number of yield, improving the margins at an overall level.
So I understood this on the ground and air side, but
Yes.
on the B2B parcels and B2C parcels, if there is, is the profitability even on the B2B parcels and
Yes.
B2C parcels also has this variability, like the way you said, between ground and air? And if that is the case, which one is better for you in terms of profitability? Is it B2B parcels which are higher weight parcels, or is it B2C which are low weight parcels? Which yields better profitability?
Even in case of B2B and B2C, depending on, so at a standalone level of or a static level of margins, they are comparable, not very different than each other. But depending on which the variability in the volume, so if your ground grows faster, it grows along with the variable cost. So in a quarter, if the air is not growing as fast as ground, the impact of variable margin would be less beneficial in that quarter as such.
Got it. So, effectively, basically, it is not the type of shipment, whether it's B2B, B2C, it is more mode of the movement of the cargo, which impacts the margins.
Yes,
Am I
yes,
correct?
yes. The variability would be
Is
more on a air where we have a largely fixed kind of network, though it is optimally utilized. but at the same time, the incremental volumes coming in on a variable but lower cost commercial airline over there will yield more margins for the air product.
Got it. Got it. Got it. Okay, sir. That's it from my side. Thank you. I'll get back in the queue.
Yes, sir. Just one question is there in the chat box. So, any color on the volume growth for this year as well as next year?
Sorry, couldn't get
any color on the volume growth, trajectory for this year and next year?
Maybe it would be a forward-looking, so we will not be able to comment. There will be seasonality, and there will be, of course, running growth that is happening, and we'll, of course, as management, will try to improve the numbers, but no view from the company point of view.
Sure. And just one more question is that on the capacity utilization, if you can just provide some capacity utilization on the new aircrafts and how where it has reached and what's any sense on the existing aircrafts as well.
So the new aircrafts have also reached the normal capacity utilization, which comes to about 85%.
So all the aircrafts are now, yeah.
Yes. So they basically, we don't fly point to point. It's a part of an overall network. And even the new aircraft have been kind of merged into the existing network, adding only Guwahati as an additional station. So, so overall network utilization is about 85%, and that is more or less standard across the flights, I would say.
Got it. Yeah, I think those were the questions. Anyone having question can please raise their hand, or we can close the call. Yeah, I think we'll just take the last question from Mr. Achal. Please go ahead.
Yeah, sure. Achal.
Yeah, thank you for the follow-up, sir. Sir, if you could give us a sense in terms of the demand situation, or the business, how it is trending, because we hear that consumption is weak. There is fair amount of slackness. So just wanted to check, are you seeing any improvement in the volumes as we speak? And B, any structural change you're seeing in the industry in terms of competition or in terms of pricing or anything on that front, sir?
So our volume growth trajectory, you can see that, I mean, it remains stable, not significantly going up or down. So from that point of view, and we also have a very stable base of the customers. Even when we hear about slowdown in certain industries or at times in e-commerce, we don't see that because we are not very big player, but we service the very niche set of customers. And customers also, given the premium that we have with the service quality, customers would use us for their critical shipments where they are willing to pay a good price given their service requirements or their customer requirements as such. So we don't see a very significant up or down in the numbers that we have.
Understood. And of your total expenses, sir, would it be possible to know what is the fixed cost? As in, if the volumes go down 10%, you still incur the same cost. If you could give us a sense, let's say of the the quarter's expense, how much would be fixed, let's say, of the total employee cost and the other expenses? We have roughly about 400 crores quarterly expense, right? So how much would of this would be fixed cost according to you? Because I presume the freight and service cost and all that will be fixed before we calculate the gross profits.
So yeah, employee costs would be largely fixed in a short to medium term. Within freight handling, we have a mix of both fixed and variable. The aircraft cost will be largely fixed as far as the cost of the aircrafts, but the running cost of the ATF would be variable with the number of flights we would have. And largely we try to variabilize that by ensuring that we fly only when we are sure of the capacity being utilized. But now with the increasing growth in the ground, we also are increasing the variable costs for the middle mile. Last mile also, largely our deliveries are outsourced with our vendor, with our partners, which will have 50-50 variable and fixed element. So it's a mix. If you ask me at a quarter level, looking at the expenses, how much will be variable and how much will be fixed, it would be close to 50-50.
So that's a
50% would be
massive
variable.
operating leverage actually if the growth picks up.
Yeah.
If the growth is substantial, let's say a double-digit growth, you
Yes.
can have a reasonably large delta on the margin. Is that understanding right then in that case?
Yes, that is one yes and no, because with the capacities being largely optimally utilized, we also cannot add a very big volume, because the capacities are all across. They are not only
Okay, and fixed cost is a
the
very
fleet,
large
but
number,
also
right?
facilities. Yeah.
Sorry, I couldn't hear you, sir.
Yeah, so the first mile, last mile capacities would take time to ramp up, be it facilities or even manpower for pickup and delivery. So we need to really, when peak season also happens, we start ramping up the capacities which are variable. So for a 1 or 2 months of peak also, they would be more or less like fixed in nature, because we would hire the vehicles as well as manpower for that period and some facilities. Yeah.
Understood. Great, sir. Those were my questions. Thank you so much.
Yes.
Yeah. So we'll just take one last question from Mr. Vinod from MENA. Please go ahead.
Hello, Vinod. You're on mute.
Yeah, Vinod, you are on the mute.
Yeah, I think.
Can you hear me now?
Yes.
Yeah.
Yeah. So thanks for the opportunity, sir. This is such a, I'd like to hear the strategy question. Like, how does Blue Dart plan to strategically balance its focus on expanding the market share, especially, let's say, particularly in the surface segment where the competition is growing much faster, while simultaneously driving the margin recovery as well in the coming years through operational efficiency as well as the premium service differentiation?
Yes, so our prime focus is always on service differentiation, the service quality. While we also work towards increasing the volumes, the market share, that is without giving up on the margin. Uh, yes, it's a mix of different products with different variability, with margins going up and down with the increasing volumes, depending on the customer mix as well as the product mix. But the prime motto is to have that differentiated in service, which will help us to grow without giving up the profitability. I hope strategically that is how we look at
Profitable
moving
revenue
forward.
is the key.
Yes.
Okay. So basically, you don't want to sacrifice just for the sake of increasing the volumes.
Yeah.
That's right. Yes.
Fine. Thank you, sir.
Thank you, Vinod.
So we are done with the questions. So, sir, any closing comments from the team? Then we can close the call.
Yeah, so I mean, we see the growth trajectory being consistent and stable, and we are also working towards improving the business further with improvement in both in taking care of the peak volume, adding to our profitability as well as margins. That is going to be the way forward for us.
Sure. So thanks everyone for joining in, and once again, thank you to the management of Blue Dart for giving us the opportunity to host the call. Thank you everyone.
Yeah. Thank you all. Thank you, Alok, for organizing. Thank you.
Thank you. Yeah.
If you found this video helpful, please like, share and subscribe for latest upcoming videos.